Hey everyone, welcome back to the channel. Today we're diving into one ETF that long-term investors absolutely love. But strangely, this year it's been lagging behind. And that contrast is exactly what makes it interesting. If you're someone who wants steady income, strong fundamentals, and long-term wealth creation, you'll want to watch this till the end. Let's get into it. The odd year for a winning ETF. The Schwab U.S. Dividend Equity ETF, known as SCHD, has built a reputation for being one of the most consistent performers in the dividend investing world. Over the past decade, SCHD has delivered double-digit average annual returns, not just in one period, but across the last 3, 5, and 10 years. That's rare for a dividend-focused ETF. But 2025? This year hasn't been as kind. SCHD is down slightly, losing around 0.8%. And because investors are chasing flashy sectors like AI, dividend ETFs like SCHD have drifted out of the spotlight. But this could actually be the perfect setup for long-term buyers. What makes SCHD special? SCHD isn't your typical high-yield dividend fund that chases risky companies. It follows a disciplined approach, selecting 100 top-tier dividend stocks based on dividend yield, dividend growth over the past 5 years, business quality, financial strength. Right now, its holdings collectively offer nearly 4% dividend yield, 8% plus average annual dividend growth over the last 5 years. So you're not just getting income today. You're getting income that keeps increasing with time. Dividend growth, the secret weapon most investors ignore. Here's something most beginners don't know. Companies that grow their dividends tend to outperform almost every other category of stocks. Historical research shows dividend growers 10% plus annual returns. No dividend stocks 4% returns. Companies with flat dividend 6-7%. Why? Because businesses that consistently raise dividends usually have strong cash flow, stable earnings, proven management, long-term competitive advantages. SCHD packs 100 of those kinds of companies into one ETF. Why SCHD looks attractive right now? Today's market is obsessed with AI, robotics, and high-growth tech. Dividend stocks? They've been pushed to the side. Which means prices are lower. Yields are higher. SCHD is quietly becoming a value opportunity. When investor sentiment shifts, which it always does, funds like SCHD tend to shine again. And as the companies inside SCHD continue increasing their payouts year after year, the total return potential grows. So, should you buy SCHD now? Here's the honest truth. SCHD isn't a get-rich-quick pick. It's a build wealth quietly but powerfully type of investment. If you want steady passive income, lower volatility, proven long-term winners, freedom from picking individual dividend stocks, then SCHD is one of the most solid ETFs to consider right now. It's not on every analyst's top 10 list at the moment, but that's exactly why contrarian investors are watching it closely. SCHD may not be trending on social media, but history shows it doesn't need hype to deliver results. With a strong track record, disciplined strategy, and rising dividends, it could be positioning itself for a powerful comeback. If you're building a long-term portfolio, this ETF deserves a spot on your radar.